And welcome back to Short Fall Show Live. My name is David Lincoln, and we saw TVIX go to 1,000 yesterday in pretty remarkable vol spike. Another thing that happened is this big fund blew out. Malachite is a vol fund run by a couple of ex-Goldman guys. I tried to find out from some contacts I have what exactly their positions were, but I wasn't able to find that exactly. But safe to say they weren't long volatility. Excuse me. Also, we did see the expiration of the March future yesterday, and I don't know if you noticed, but the VIX did come in lower than, it was down with the market down yesterday. And I would say part of that down move is actually just the composition of the VIX changed as they stopped sampling options from the 1 month and started sampling options it was all April and moving into May, but just because of that little switch in composition, I think that's part of the reason why we had a down move. Also, notice, as I was talking about before, the spread between the VIX and the front month future is a lot closer than it was before. So if you in fact, yesterday at one point, it was only like a couple points off of the VIX, the front month future. You can see on my screen here, I have them displayed. Let's see if I can close up a little bit on this real quick. You can see the futures here on my little watch list. Right now, we can see the VIX 79 and the front month future 74. So about 5 points off of each other, 4.5, 5 points. But they were even closer at one point, and that's very tight from what we've seen. Remember, we've been seeing this like 15 points off the front month future, and I think as that front month future gets closer to the VIX, it becomes a little bit safer to enter a short, because with the front month future right next to the VIX, pretty much any down move in the VIX corresponds to a down move in the future. It's not like before where the VIX can move down 15 points and the future go up. When the VIX is right next to the future, there's less of that happening. However, there still is this big spread between the first and second month futures, so we still are in backwardation. So I would be extremely careful about making bets one way or the other, because it's hard to tell what these products are going to do. I got a lot of correspondence from people yesterday saying stuff like, TVIX is up, told you so, now what do you say? And the answer to that is, I said it was a risky trade before, and just because it worked out for you doesn't mean it wasn't a risky trade. We can make, and I'm not saying this is specifically an example, but we can make bad trades and have them still work out for us. I think that TVIX is safer to be long when we're in backwardation, certainly, than when we're in contango under quote-unquote normal times. But I still would think it's a risky trade, and new people who have never traded it before, like jumping in on the action, I would just caution you to be very careful. Obviously, if you're buying a $500 stock, the most you can lose is that $500 a share. But I would still be pretty careful with these things. TVIX currently 914 at 915. Once again, we are in a downtrend until further notice with all this stuff. So, we look for, it was a nice rally into the close yesterday. Everything was melting up. However, it starts to be a situation where it's hard to counteract that downtrend. I mean, it's there, and every time we go up, it seems like we're just. Let me widen out the chart here so we can see a little bit better. Every time we go up, we're back in that downtrend, and so I caution people to be extremely careful about that. Hey, what's up, Spencer? I see you in the chat talking about shorting this stuff. Yeah, I was looking at stuff yesterday too. I just, I've gotten burned so many times trying to short this stuff that I'm like extremely gun shy at this point personally. Now, probably I was talking with one of my trader friends yesterday, and probably the moment that I become gun shy and don't want to short stuff anymore, that's probably the top. It's probably going to go straight down from there. But yeah, if you are shorting stuff, I would, whatever week the expiration you were thinking of picking, I would go like a few more weeks out, that kind of thing. So April 24th, the thing is, it's got to it's going to make moves between now and April 24th down, certainly. So, I think that trade is a trade where you can make money. And the key is when it goes your way and you're in a big profit on it, to actually take action to, at least take some of the profit off when we are in a down situation, because we could pop up pretty quickly again. Yesterday was really looking like that sort of kind of capitulation event, in that we did get that extreme VIX pop, and it seemed like the end of the world there for a few minutes. And I think that is the kind of thing that we need to see for the wheels to completely come off the cart before we kind of start to move higher. But the other thing is, I don't know if you watched that video of my friend Andrew coming on. If you didn't check out that one, I know it. You see the title and it says social distancing. It doesn't sound so exciting to watch, but if you listen to him in there, he says some stuff that makes a lot of sense, which is basically we need to see the VIX move lower. We need to see the VIX trend lower off the highs and trend lower before there's recovery. We need to see the public and the financial world really start to see progress in the U.S. towards containing this outbreak and putting it behind us. We need to see policies that the market is convinced are going to work to move the economy forward. And until we see that, we're going to have this volatility. What the market is telling us is that the policies that are out there right now are not convincing to people that the economy is going to be able to right itself soon. As soon as we have some clarity, one thing that I saw last week, which I've mentioned a few times, is that a friend in Singapore was saying, well, they seem to have it under control there, and they're kind of they're over the hump on it. In a in the free market and in a democracy where people can do whatever they want, it's kind of harder to control, in a sense. I don't know why I'm pitching for totalitarian regimes here, but it's harder to control this in this free area of the world. And so there needs to be some sort of clarity as far as like, how long is this really going to last? When we're going to go over the hump? We need to see like the number of cases in the U.S. Reach a peak and then start to subside, something like that, before this market is going to start to pull itself together. And we haven't had that yet. VIX 79, it's still a ton of uncertainty out there, and just a down move from 79 to 69 in the VIX really isn't enough to say that it's time to jump in and buy stuff. It seems we need some real clarity, and instead of the chaos. Also, people have talked a lot about the spreads being very wide. There's not a lot of liquidity out there. There's, when you've got firms blowing out, it takes people that are willing to take risk off the playing field. And I say this over and over again, but all these products, they all go back to the SPX. And the SPX, there's just not that many people willing to step in and sell options. We had firms for a long time. We had firms that it was their whole business model to come in and sell these puts in the SPX, and that was really fueling this whole setup that we had for vol trading strategies, which was we know that there's people coming in and selling those puts, and the put sellers and the people that are willing to take risk in the world, in the market, are what fuels us being in contango, what fuels the rally and all that. And a lot of those people are gone, and some of them are gone forever. The situation is not going to be back to where it was for quite some time, and it's something that we all need to adjust to. It's very hard as a trader to adjust at times. There's some people that are that I know who are traders who can feel a tone shift, and they can adjust to it quickly. I'm not like that. It's hard for me to adjust. You find little things that work for you and you stick to them. That's how a lot of people trade. And to make that adjustment that we're in something new, because so many times before they say, oh, you know, the situation's changed, but then it's right back to where it was within like a week or a day or something. Well, this situation we're in now, it's going to take a little longer for stuff to come back. And so make the adjustment, protect yourself. Cash is king. So, we're in this situation. There is some premium out there that I've been looking at to start maybe looking at selling some stuff. Let's pull up the SPY here. Yesterday I was looking at like Tesla, and I was saying, well, Tesla's just going straight down. Should I just sell some out of the money calls? And I was looking in Tesla at let me get out of the way here, but I was looking in Tesla just at some like out of the money calls like a week out, just because the volatility is so high in all these products. Like I was looking in March at like with 8 days to go I was looking at like the 390.95 call spread. And I think I was looking at the front week actually. But the thing is, with trades like that, if you're selling like slightly out of the money calls or slightly out of the money puts, it's really just gambling. It's really kind of like just a 50-50 shot. And so I would be careful about that. I was also looking at SPY. If we look at SPY options, when we get a little bit of a rally, there's the temptation. This volatility 99 in the spider, and at the money's 238. You can look at something like the 250.55 call spread, and as we start to rally, and then that next wave of sell-off, it's tempting to sell something like, and I'm getting in the way here, but this $5 call spread, it's tempting to sell out of the money call spreads for like $2. And I was considering a trade like this yesterday, but once again, you need to be careful with that kind of stuff, because we have come down a lot, and there could be ferocious rallies. But I've basically just given up on being short VXX, because it's just I've had all the pain I can take on this. I've been wrong. So I'm kind of on the sidelines right now for a little while. We just continue to make higher highs. There's stuff out there to do. There's still stuff out there to do. Certainly you could go far out in like Jan of next year, like 300 days out or 180 days out, and we'll certainly come in from here a little bit. The other thing you could consider doing is either to the short or the long side is like 50 days out, just putting on some sort of spread. And it seems like it's likely we're going to be higher than we are now and lower than we are now. We will see if this VIX is the high. I've called the high so many times that it's just ridiculous for me to, like all my credibility is basically shot as far as picking direction now. So I can accept that and stop picking direction. I'm just like self-harming myself by shorting this stuff all the way up here. And like I said, we could be close to a top, in that I'm not willing to put it out there until I see a little bit of stuff starting to head lower, because what we're doing is heading higher over and over again. So it's tough. It's tough out there. Anyways, I'm going to appear on an interview later today on another channel. We'll try to rebroadcast that here. Let's go into the chat for a second. Let's see, do I have the chat up? And how are you guys doing? A lot of people on social media, like I said, have been successful at trading to the long side, and that is awesome. I love hearing people make money, especially in this tough environment. I've tried to, scoop some stocks, and that hasn't worked either. It's like I buy stuff and it moves lower, and it's hard. I bought something yesterday. Why not buy UVXY underlying and sell out of the money weekly calls against it? Well, that's a possibility to reduce your cost of being long UVXY. It's just that with the VIX at an all-time high, it doesn't make sense to me personally to buy a volatility product. Now, I am shying away from selling it, but yes, being long has worked for a little while, but I just don't. It doesn't make sense at record high volatilities for me to be buying a volatility product, and I don't want to do that. Yeah, still have money left, but it's like I don't want to not have money left. So it's like maybe just sit on the sidelines for a while. Also, my side job is gone. So for me to be risking more money almost doesn't make sense. That being said, I have a hard time staying away from trading for very long, so I'll probably start making trades again today again. But we just have to wait and see what happens with this stuff. I've been nibbling at some stocks, nibbling at just like the SPY a little bit, because obviously stuff is more of a bargain down here than it was before. But and we've had a little bit of a recovery today from yesterday afternoon. We did rally. We aren't down huge today, but once again, going back to the chart, you got to go back to the chart and see like what's the trend here. Seems pretty clear to me that we rallied into the close yesterday, but does that mean we're in a rally now? I don't know. I haven't really seen it yet. So I'm being cautious. I've looked at some things, like I have looked at some spreads. So for example, in in VXX, I've looked at some calendar spreads. So I've looked at doing something like going out, buying the April 60 put and selling the like the 8-day out 60 put. Okay, because this kind of trade, you actually collect a decent amount of money if we analyze this trade. And I've looked at a bunch of different ones of these, even at the money ones. You for a one lot, you're collecting $30 a day. Your deltas are pretty tame unless we move really far in one direction or another, which is certainly possible. But this is the kind of position, if you were to buy this spread, you would probably just, if we moved higher, you'd probably just leave it on with and think that we would come back. And same thing if we move lower, you just kind of put this trade on and hold. And this kind of income producing trade where like you're basically putting time back on your side, I like a lot in this environment. I've mentioned these before, calendar spreads. And you can look at the months here and the volatilities on the right side and try to pick the month you buy, try to pick one of the lower ones, and the month you sell, one of the higher ones. Now, people, obviously, I know in the comments, so before you say it in the comments, let me say it here. When you're buying a calendar spread, this is a long Vega trade, so you are picking up a little Vega. What that means is that if the price level of everything comes down, that's going to work against you. So when I'm picking a strike, I'm going to pick a lower strike. That way, if the Vega is going to come in if this moves lower. So when I pick a lower strike, A, we're expecting this to move lower at some point, but B, that way you kind of put these short deltas on your side to offset any crush in Vega. So once again, this is this trade I'm talking about would be the 17 April, 27 March 60 put spread. I also look at the 65 put spread. And this way you can you want to pick a strike where you most think that most likely this is going to go to. And this is a way of kind of putting time back on your side, A, and B, kind of taking advantage of this very high level of option pricing. Because as you know, prices are really high, so buying outright puts is risky and can be painful. Buying spreads, we've seen like this thing spike way away from the spreads, and that's painful as well. So maybe a calendar is a strategy where you can kind of start to collect some of that really high premium that is out there in the market without adding too much to your risk, because you've bought one option and sold another. you've mitigated some of your risk there as far as direction. So maybe take a look at some of these type of spreads. If we go to UVXY, we can find some similar type spreads. Once again, look at these price levels in UVXY, 374%. So like, let's see, April. So what if we take like the 100 strike might be a nice one. So if we buy, actually, I'd probably want to go lower than the 100 strike. Let's take the 90 strike, for example. So if I buy the 90 put in April 17, and I go to March 90 put, I sell that one. Okay, so each one of these trades costs $1,100. You collect $70 a day, and your deltas is sort of negligible. Once again, I'm picking a strike that's a lot lower than where we are right now, with just the assumption that my bias is to the downside. But I look at a couple of these counter spreads as something that's interesting, and then I would just look for individual stocks that are high priced, high volatility, and take a look at some of those. People are going to start, as I've said before, don't get your head like too out of whack. I know people are getting very excited about owning volatility here, and you see this TVIX move up $300, and you think, wow, $300, I could make $300 if I buy this stock. But I would be careful about getting your head too upside down and thinking too much like, it's the same case against like going really short the market here, is the case of getting really long volatility here, and that we're already at a level where we've moved down a lot. And so I wouldn't want to get whipsawed by being too short here and too long volatility. Yes, I've seen people, talking about making huge returns in TVIX, being long it, and I'm happy for those people that they've made money, but it's a very risky thing out there, and I would caution you about taking that sort of risk. Spencer says, if a person is longing VIX at these prices, I don't know if they're a genius or a complete degenerate. Very true. But it's a it's a trading environment. People are going to have different opinions out there, of course, and who's right at the moment, it's hard to tell. My advice to you guys is be careful. I know some people have made money, which is awesome. I have not made money lately, so I wouldn't place a bunch of faith in any trades that I'm putting on, because I'm not hot right now. And for me, I know when things aren't working for me, I get smaller and smaller and smaller until they start working for me again, because I don't want to give up on my capital. So right now things aren't working for me, so I'm kind of on the sidelines to B, being small. I like having cash still, and I'm trying to hold on to that. But it doesn't mean that I'm not watching the market very carefully to see what's going on here. When we do look at the chart, let's go back to, I spent a lot of time looking at the charts of the E-mini and the NASDAQ. And when we do look at this chart once again, it seems like the down slope is kind of like leveling off a little bit. And we do look for us to make an equilibrium. Many people, there's mixed opinion. Many people think that we have to have a big violent down move before we can go up. But I don't think that's necessarily the case. It could happen in any sort of way. We could just kind of flatten out. This steep down move could just turn into okay, now we're not going down 13% per day. Now we're going down 3% and then 2%. And now we're just kind of sideways for a while, that kind of thing. It seems like the VIX is having a hard time getting past 80 right now, but we'll have to wait and see. At some point, it's kind of like, who's there? Who comes in and sells today? Like who's waking up this morning and saying, "Oh wow, the market's down. I think it's time for me to sell some stuff." After days and days of the crisis, you'd think that whoever had stuff to sell would have sold it by now. Anyway, we are 5 minutes till the open, so I'm going to let you enjoy the open. Thank you to all the new viewers. Thank you to people that have grab a membership there. It's like $2. Come on, you guys can afford $2. It helps me out. Like I said, my main job is gone, so your $2 can help at least pay for my internet bill here. So thanks to all those who've grabbed a membership. I will be on a company's. I'm doing an interview today, and I'll see if I'll rebroadcast it here, or at least provide links for you guys. Thanks for watching. Best of luck in the market today. Go out there and make some money. This is the time for us to go out and make some money today. So let's do it. See you soon.